Good morning and welcome to a brand new episode of Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormuz Fatakia. And there's a lift in the markets. The Nifty is inching towards that 25,000 mark. It's 125 points up at 11 o'clock on the Nifty, with the Sensex surging close to about 450 points. And the big gainers are the ones exposed to the global markets. You've got auto and IT. And the fact that the Trump administration has delayed the EU tariffs of 50% to 9th of July has lifted stocks like Tata Motors, for instance. So Tata Motors is higher in trade. But other than that, even other auto names like a Hero MotoCorp. Hero MotoCorp has actually moved up 14-15% this month. So there has been buying interest in Hero MotoCorp. And today, it's in fact amongst the top gainers, and IT is doing pretty well.
You know, it was pouring outside just a few minutes ago. I guess it's still pouring outside, but it was pouring gains as well on the street. But you're slightly off the highs of the day. Now, of course, you can't complain about the fact that there is still some hesitation above that 25,000 mark for the index. 25,079 is the high of the day today. So almost around 110 points off the highs, but still holding on to gains of around 120 points as well. We are counting down to a very crucial monthly expiry as well. There are a lot of rebalance. There is a lot of rebalancing that has to take place this week in various stocks. So those need to be in focus. Earnings season draws to a close. So those need to be in focus as well. And it is the banks that are leading this cool off from the highs of the day, especially the Nifty bank at one point had almost slipped into the red. Still around the flat line is where the index is closing in on its record high levels as well as the Nifty bank. So keep an eye out on that. Of course, can't not ignore the earnings reactions that are taking place in today's trading session as well. GE, Vernova, T&D India, that is the earnings reaction of the day. The revenue was a miss on expectations, but the other parameters were very well. The order inflow was good. Margins were the highest among its peers. So the stock is in a 10% upper circuit in today's session. Phenolics Industries is one of them as well, 7% higher on that stock. And Pharma was higher on Friday, was higher on Thursday, and it's building on to those gains in today's session as well. So another 5.75% on Pharma. So third straight day of gains for that company as well. And the last name that I wanted to mention on the flip side, though, was Sarda Energy. Sarda Energy is down 7%. Nigel was mentioning that although on a year-on-year basis the numbers were good, the margins were lower on a sequential basis. But of course, the big story of the morning is the monsoons, and they have reached Kerala 8 days before the usual date, which is also the earliest arrival since 2009. Manisha is joining in with all the weather updates and the forecast of the Met Department. Manisha.
Oh, well, absolutely. Records are breaking, aren't they? And this is an important one because while, of course, we are looking at an above or normal monsoon, that is something that SkyMet and IMD both told us the forecast of anywhere between 103 to 105%. The expectation also has been about an initial or early onset of monsoon, and that's exactly what we are dealing with. While IMD did talk about 27th of May, we have the onset confirmation on Kerala for 24th of May itself. And this is the earliest onset since 2009. So we clearly are looking at earlier onsets. Remember, the pre-monsoon showers started as early as April end itself. And that's exactly what we are dealing with. So now this is what monsoon numbers really are. The usual date for onset is 1st of June. And the monsoon covers all across country. That is by 8th of July. And we are looking at early progress of monsoon as well this time around. So when you look at the numbers itself, the monsoon is advancing into parts of northeast versus the usual date of 5th of June. Remember, monsoon does come into Maharashtra by the date of 7th or 8th June, but we have seen monsoon already cover entire Goa and parts of Maharashtra and Karnataka as well. So much so that we are dealing with a red alert right now in sense of rains in most parts of Maharashtra and in Mumbai, Palghar, Ratnagiri, Sindhudurg, etc. The monsoon also has reached into the northeast areas of the country. Mizoram, Manipur, Nagaland are some other areas where we have seen monsoon continue to be in there. Also, when you talk about Maharashtra itself, we usually see monsoon come in by 7th of June. This has happened on 25th of May itself. And Mumbai usually gets an onset by 10th of June. And we're looking at 26th of May for this as well. So really onsets for Maharashtra, for Mumbai especially, this could be the earliest ever onset into the city there. When you talk about the alerts then, and IMD has put out various alerts right now. There's an orange alert which has been converted into a red alert right now, and that yellow alert also has been converted into a red alert when it comes to Mumbai, Thane, Palghar, and all of those cities and districts as well. Moderate to heavy rainfall is what is anticipated until 1 p.m. and then would continue for the rest of the day and couple of next days as well. Next 2 to 3 days could actually be looking at heavy monsoon as per the IMD forecast there. When it comes to a moderate rainfall, that is what you're anticipating in Karnataka. There are school closures that have been announced in Mysuru and Kodagu. Northeast states also are expected to see hailstorms, scattered rainfall, etc. There are some rainfall alerts also happening in Gujarat, in Haryana as well. And the current present active monsoon is expected to continue until 2nd of June, and that is perhaps when after that is when we will see a break. But until 2nd of June, the expectation is that you are going to be looking at very heavy monsoons or rainfalls there. To take this discussion forward, we are now joined by Mr. G.P. Sharma from SkyMet. Mr. Sharma, hi, thank you so much for joining in. Clearly, you've been talking about on how we could be expecting or could be looking at very heavy rainfalls this time around, and we've seen that as well. Are records being broken now? Is this the earliest ever in Mumbai?
Yes, it is likely. Okay, I think in another day or so, we will have the monsoon in Mumbai. It's raining. It's already there. I will say the monsoon is already there. Its official announcement has to be made and could be possibly, I think it will be the earliest. It was on 29th of May on 3 years. That is the 1956, 1962, 1971. When it arrived on 29th of May, the earliest. And if it is now, possibly all time. At the earliest arrival of monsoon over Mumbai, that will be a record as such. It has been, like you said, 8 days before over Kerala, even 15 days before, 10, 15 days before over Andaman Sea also. Similarly, Northeast India, simultaneous arrival. This monsoon has got many firsts, like it was a strong onset. Okay, unlike many a times it makes a soft landing. It happened last year also. It happened last year. But then before time arrival, strong arrival. In the first burst itself, it covered large area. Second day itself, rapid advancement, entered Goa and even just touched southern tip of Maharashtra as well as. So it's many of these firsts are there in this year's monsoon, but then it happens like that. As you said, I hope the next few days, 1 week or so, yes, activity will go on because basically for Maharashtra and particularly for Mumbai, that's a system which is still persisting as a low pressure area closer to the coast, Konkan coast. That's the one was responsible for causing these rains and pulling the monsoon current up or across the north coastal Karnataka, Goa, and that adjoining parts of Maharashtra. That's going to slow down tomorrow. Okay, sometime late tomorrow. Okay. Today the rains are going to carry on. I will think about next 4-6 hours or so. Mumbai will have. Though the southern parts will have more rains, like Sindhudurg, Ratnagiri, Hanai, as we go towards Mumbai, possibly Alibag or so, and further north of Mumbai, but the shorter will be a little less intense as compared to the southern parts, but they are going to continue. Yeah.
Point taken. Mr. Sharma, I have a two-part question here. One, it usually is by 8th of July that we see all India covered. But with the kind of progress that we're looking at right now, do you see that record also broken? That's one. And second is, while we do understand that the water reservoirs are getting supplied right now, but what does this really mean for agriculture? And are you also looking at a big break in the monsoon as after its onset in the first and second part of June, really?
Yes. Firstly, early onset, in any case, there is no assurance that it's going to cover the country before time. Like 8th of July, you said the border post of Rajasthan, West Rajasthan, no surety. Okay. Monsoon, in any case, it doesn't keep the same pace or steady pace for a very long time. It could be about a week or 10 days, which will happen even this time also. After about another 1 week or so, I had mentioned it earlier also on your channel in discussion with you that we expect the monsoon to slow down after the initial onset. We'll see some bumps, we'll see some breakers. Definitely in the first week of June itself, you will find it won't maintain the same pace. Yes, Northeast India, it is already there now. Adjoining parts of eastern states, say some eastern parts of Bihar, West Bengal region, possibly it will arrive. Normally, Kolkata and Mumbai, they have the monsoon simultaneously. It may not happen this time. Okay, Mumbai will have much earlier than Kolkata. After it has covered that much of a distance in the next about 4 or 5 days, main activity is because another system is coming up in the Bay of Bengal, which is West Central Bay, off the coast of Odisha, North Andhra Pradesh. That will carry the activity further inland. That will the monsoon progress will be there. But after it fizzles out or it is slowing down also, then thereafter we find some break when the monsoon will take some time to advance further over the central parts of the country, over the parts of Madhya Pradesh, over parts of Uttar Pradesh also. I may not call it as a stall as such, but something similar to that for at least about a week or so, you will find that thing happening. So therefore, and when does it revive? Nothing can be said at this moment. The revival is normally when some system forms either side of the coastline, both Arabian Sea, Bay of Bengal, but more of Bay of Bengal. Arabian Sea doesn't see much of a purpose. So that's what the activity. Next 1 week, very active. After that, slow down. Yeah.
Okay. Mr. Sharma, so very quickly, your forecast is for a normal monsoon, 103% of the LPA for this season. That stays?
That
or
stays.
is there... That stays, 103%. And June, you're at 96%. Now, considering that after 1 week, which is the first week of June, things start slowing down, is there any change in assessment to that?
See, whatever rains now, in any case, it is one of the rainiest month May we have. But unfortunately, none of these rains will be counted against the monsoon because the count starts on 1st of June. Okay. As I said, the beginning itself, after about 2nd of June, we will have a little sluggish current going into the central parts of the country, means the rainfall, but rainfall in the month of June on daily basis, it is not much. To start with, just about 2.5, 3 millimeter per day, going then 4 millimeter, 5 millimeters. So it's not much. So the deficiency may not be very large, but then definitely the monsoon is going to slow down. And I still maintain my forecast that in the month of June, possibly we will have a little less than normal rainfall, 96% we have given. And that is mainly because of a slow current over the North India, Northwest India, where monsoon becomes a little sluggish as soon as as and when it reaches there. There is no great push for the monsoon to reach those parts, intrude those parts, western parts, the borderline cases of Punjab, Haryana, and those parts. You need a strong western disturbance at the same time when the monsoon current is there to take the monsoon to the interior part. Okay, if it happens, it goes. If it doesn't happen, it waits for some time. Wait could be even about a week or so. But then for the agriculture point of view, Manisha had asked, okay, basically the Kharif season, sowing starts, and farmers they plant with the first monsoon rain over different parts. Means for Kerala, South Interior Karnataka, since the normal date is about 1st of June or so, the sowing is planned around that time. Okay, this time is a little early. Early monsoon, good, because it leaves a lot of soil moisture, it leaves some humidity in the air, which is good. Okay, so, but North India, we have to, still wait and
Right.
Mr. Sharma, sorry to cut you in. You know, for us here in Mumbai, there are a couple of pertinent questions that our citizens would want to know. There are various unconfirmed reports of a cloud burst. Would you like to verify that? One. And two, a lot of Mumbai, all of it relies on the 7 lakes for its water supply for the entire year. Do you think that this normal rainfall forecast that you have, above normal forecast, will be applicable to Mumbai as well? Will we get enough rains this season for us to last until the next monsoon?
Sure. Month of May has been very good. Actually, normal rainfall for Mumbai in the month of May is just minimal, just about a single-digit rainfall. Okay, it is only when years like this, it rains heavily in the month of May, the average is about double-digit, 10, 11 millimeter or so. So it is a bountiful rainfall this season, and which is good for all the water bodies which are across the city, adjoining areas. They will be full. Cloudburst is basically it's a very heavy rainfall amounting to about 100 millimeters in about an hour's time. That is the time we call a cloudburst. There are occasions when in the cloud cluster which we have at the moment, it is there. Radar picture, you can see it's around Mumbai within a radius of about 100 kilometer. Thick and dense clouds are there. Okay, but then I don't foresee any situation of any cloud burst as such, but the rains are going to continue, which may hamper your operations, even air operations also. The strong winds are there.
Sure.
Water logging will be there. All that is there, but then the cloud burst I don't see. And good news that possibly Mumbai will have a good monsoon this year. Yeah.
Okay. Thank you, Mr. Sharma. So we'll take it as bountiful rain in Mumbai, but can't classify it yet as a cloudburst. Thank you very much for joining in. Get into a break. On the other side, Ravi Jhakar, who is the Director of Strategy and the Group CFO at All Cargo Group, will join in to discuss the Q4 performance. Welcome back. All Cargo Group, which comprises of All Cargo Logistics, All Cargo Gati and All Cargo Terminals, reported the Q4 numbers. Now, while All Cargo Logistics saw a revenue surge of about 24%, for the other two businesses, Gati and Terminals, the revenue growth was in low single digits, but All Cargo Gati did see an EBITDA surge of nearly 34%, while All Cargo Terminals EBITDA went up by nearly 10%. Ravi Jhakar, who is the Director of Strategy and the Group CFO at the All Cargo Group, is now with us. Ravi, thank you very much for joining in. So let's start first with the All Cargo Logistics business. While the top-line growth was strong for FY25 with a growth of about 24%, the EBITDA margins contracted 3.2% versus 3.6%. What explains that, and what is the guidance, the number for FY26?
Hi, sorry, it seems like I got disconnected in between, but making this of your question around the trend of the last quarter and the trend going forward.
So we wanted to specifically focus on All Cargo Logistics. If you could explain what led to the dip in margins and the guidance for FY26 on margins for the logistics business.
Yeah. So on the All Cargo Logistics, which is primarily driven by the international supply chain business, I would say one needs to look at the absolute numbers because a large part of revenue is a pass-through cost. And if you see on a quarter basis, on a year-on-year basis, we saw both revenue and EBITDA on console basis expand by about 17 and 18%. For the full year, we saw revenue go up by 24%, reflecting more on the average freight rates. And the EBITDA went up by about 12%. And the gross profit is also about in the same range. What we observe is that there has been quite a lot of volatility with the tariff and trade deal announcements over the last few weeks. It seems to be settling down now. There seems to be more of a narrative of reconciliation, and that should bring in stability in the long term. That's our expectation. In the immediate period, since there was a few weeks of sailings missed on China to US trans-Pacific trade, we are now seeing a significant revival. So there's almost like a 65% decline in China-US trade, which has now rebounded sharply as well in the week gone by. So we believe that there could be some near-term volatility for this quarter, but beyond that, things should stabilize and we should see, trade recovery happening. And that should mean that we should see volume growth. Freight rates may remain slightly higher because of these disruptions in the coming months and then the ensuing holiday season to start with.
Ravi, good morning. Thank you for joining in. So with all of this, tariff uncertainties and with some recovery and some not, what are the kind of volume growth targets that you're penciling in for the logistics business in FY26? And add the margins bit as well, because compared to FY24, your margins were slightly narrower in FY25. So do you expect that to improve as well?
Yeah, so I would say that, if you look at the growth in the FCL business, the industry addressable market for us grew in the range of about 5%, while we grew by about 7%. The addressable LCL consolidation market, in our view, shrunk last year, and which is why we have seen some of the competition, reporting. It's not in listed space, but in the private space, we believe declined. We have seen about 1% growth. What we expect for the year coming by is we believe that the LCL growth rate and FCL growth rate both should be normal, which means that, FCL growth rate, adjusting for the tariff impact, should be about 3 to 4%. LCL could be about 4 to 5%. And in both these segments, we would outperform the market. FCL possibly in the similar proportion as this year, and LCL also. Because if you see our growth across small forwarders has been very good in the last year as well, almost close to double-digit numbers. So therefore, I would say that in both LCL and FCL, possibly we can expect high single-digit growth coming in the year. As far as the profitability is concerned, we have held on to the yields. Yields for us is profit we make on every unit of cargo carried. So from that perspective, the gross profit should do well. We are also looking at the year 2025 as a bit of a year of consolidation. We're looking at a lot of initiatives in terms of restructuring, bringing in technology, optimizing operations costs. So there'll be a little bit of flux on the SG&A costs, but directionally, if I look at FY26 towards the exit numbers, we should see similar or lower SG&A costs and much enhanced gross profit. So from an exit FY26 perspective, we should be seeing much stronger profit numbers, would what my expectation would be.
Okay, so exit margin should be higher. So EBITDA exit could be 3.6%?
Like I said, percentage terms may be misleading, but on absolute terms, we should be
So
seeing.
what are the yields then? Fair enough. What are the yields? You said you managed to hold on to yields.
Yeah, so yield is, the gross profit that we make on every unit of cargo that we carry. That's how we typically measure our top line performance, not by revenue. And like I said,
is there a number on
no,
yields?
there's no specific number per se that we share. But if you look at the gross profit that we report, and if you look at the volumes that we report a combined number. Directionally, since both segments would see a sustenance or improvement, therefore the gross profits should grow more or less in line with the volume growth that I've indicated earlier in my comments.
What's the target revenue mix for all cargo logistics between air volume, contract logistics and express logistics?
So we have the international business in which air is about 5%. And LCL is majority more than 60-65%, and the rest is full container load. On the domestic side, we have express and contract logistics. We believe that contract logistics, we should be in the range of about 25-26% on the domestic side, while express should comprise almost 75% of our revenues for FY26.
What about Gati, Ravi? Your FY25 EBITDA grew 34%. Margins were also up 100 bips. So growth is visible for Gati. Does that momentum sustain in the new financial year as well? What are the kind of plans that you have here?
Yeah, so if you see on the Gati side, we have seen a flattish revenue, but a strong growth in EBITDA. And that has been, the mixing up of the revenue. We are kind of letting go some business which is of low quality, and which is why in the preferred business we have grown, even though the overall revenue shows flat. So we believe that now with operations being very stable over the last more than 12 months now, we should be in a position to ride on the market growth and perhaps see a good, strong sales performance in FY26 as well. SG&A is a sharp focus. You would have seen the numbers. We continue to contain them. We do not see them growing much. So therefore, operating leverage should continue to play out. And what trends you have seen in this year should continue in FY26 as well on the express business side. On the contract logistics business, you would have seen a strong revenue growth. However, I would say the EBITDA impact was not in line with that, and that was primarily driven by a high degree of white space than what we would be usually comfortable with. Now, we have a few specific leases coming to an end in this financial year. So we believe that once that is done, we should be able to normalize the white space as well. So a normalized white space would mean that we do not have a wasted operational cost, and that should also help translate the entire revenue growth. It's almost been 48% growth that we have seen in contract logistics business. That should also translate into a bottom line impact in the coming year.
One final question, Ravi. Then what is your market share currently for the all cargo terminals business, and what are you targeting for this year? And if you could also tell us what are the kind of volume improvements that you're expecting for Gati, considering the fact that there are eight new hubs that are coming up in the next 2 to 3 quarters?
Yeah, so we believe that, in Gati, we are hoping for a double-digit growth on the top line, which should be in line with the volumes. We believe that yield should also improve. All Cargo Terminals is a separate listed company, just to clarify, though it's part of the same group. It does not come under the All Cargo Logistics entity. On All Cargo Terminals, we are the largest CFS operator, and I would say we had a good problem in the past. Our yards were fully utilized, and therefore we were looking for additional capacity. We expect to find some strategic opportunities to expand capacity and thereby grow revenue. And we're also working on our inland container depot, the ICD in NCR, which should also pick momentum in terms of the construction and development in the coming FY26. So overall, all cargo terminals, it's been generating strong cash flows, and we believe that business has opportunities to continue to grow in CFS and also now in the ICD and NCR.
All right, Ravi, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The All Cargo Group there. Various growth plans across business entities. Take a short break, but just before we do that, we are excited to unveil our brand new global business news channel, the CNBC-TV18 and all new CNBC-TV18 Prime, a channel that will provide live and in-depth coverage of global markets and economic developments through an India-first lens. In an inaugural episode of the Global Reset, we will be speaking with Chairman and CIO of GQG Partners, Rajiv Jain, today at noon. So do tune in to CNBC TV18 Prime. Welcome back. Still around about the 25,000 mark is where the index is. So still some hesitation at the higher levels. The dips are being looking to be bought into, but around 24,970 is where the index currently lies. Rohit Srivastava from IndiaCharts.com is joining in now. And Rohit, good morning. Thank you for joining in. You were mentioning that you are expecting this move to go up to 25,300, which is the 78.6% retracement of the entire fall that we've seen from September last year. If we do end up making new highs, where do you see the index going to, and by when do you expect the new highs to be formed?
So broadly, I think we should consider that we are in an uptrend that can last for several weeks and maybe even months. Typically, this period, when you start from March all the way into June or July, tends to be bullish. So we are in a seasonally bullish phase, which may continue to see us make higher highs and higher lows. So we cannot really bet on speed. What we can bet on is that the direction is likely to be upwards, and we are slowly going to gravitate towards making a new high. So 25,300, which I mentioned, is just the first important hurdle from a retracement perspective that we need to really get past. The odds of that happening have slowly been increasing, especially if Bank Nifty is able to pull off a breakout above 55,700, then I think the possibility of that happening increases, which means then the Nifty also would stretch towards the 26,200 mark, where we made an all-time high. So we do need, of course, various sectors to participate, but I think there's a rotation from one segment to the next segment slowly happening, and that is what will keep driving this move higher.
Okay, once this 25,300 mark is crossed, then the all-time high is what, 1,000 points away from that level, 26,277. Rohit, what about the global setup? You look at the global indicators very closely, the S&P 500, the dollar, the yields. Now, most of them, generally there was risk on in the global markets on the back of the tariff de-escalation narrative. Yeah. But now trade fears appear to be back. So what's the setup? Is it supportive of things looking up and rosy, at least till July?
So I'm not sure trade fears are really back, because, even what he did today in terms of Europe pushing the tariff discussions further down the line, I think that's going to be the process, because it takes time. One thing is to say that you have a 90-day time horizon, but essentially you want things to work out. You don't want things to fall apart. And so if it takes time, dates are going to get pushed ahead till you get what you want. So I think broadly it's accepted that, the US wants to collect a 10% on the face of it, fee for all the imports that they are doing. And apart from that, they may have various, requirements or things that they want to achieve, which is what they will try to negotiate. So I think broadly it's moving in a positive direction for the market. Now, if we just remove tariffs and we remove geopolitics like the war or, Russia, Ukraine, etc. from the picture, then we are left with only one macro risk, and that has been the bond market. So that is the only thing people are worried about, because bond yields were rising. Now, remember, we are at the level at which the 30-year bond yield, the last time it was here was in October of 2023. And then moment it backed off, you saw one of the strongest rallies in the market in PSU stocks, etc. And we are back at the same level, except that this time the downward momentum in the bond market is very, very slow. So somewhere the bond market is also losing its downward momentum. It's got some reaction, but the reason for that would be that you can hear that the Fed is eventually going to move towards lowering interest rates. And since they've already moved to cutting QT, means at some point of time, they may even have some kind of a bond buying program, whether the same or with a new name. And that, I think, expectation is why the bond market is not exactly falling apart. The hope is that first, the other countries, you've already seen Germany and China start stimulating and cutting interest rates. India started to do that from February.
Right.
Now the question is, when does the US do it? Because that's the last man standing. And it's becoming slowly and slowly more visible that we are closer to that point that they will flip. And so that is why the last risk that was there for markets, which is some kind of turmoil from the bond side, is likely getting moved out. And I think that's why risk is coming back to markets.
Right. One final question, Rohit. You'd mentioned that the Nifty Bank is positioning itself for 61,000. By when does that happen? Once it breaks above 55,700? And two, being that you mentioned PSUs are one space where you find value, being the low risk exposed sectors. Where within the PSUs are you finding value? Be it railways, defense, OMCs? Where are your picks here?
Yeah. So first, the Bank Nifty typical rallies, what we've seen at least since March, has been 2 to 3 weeks for each leg. So I will give it around 2 to 3 weeks to get past 60,000 as far as the Bank Nifty is concerned. Now within PSUs, so they broadly these are areas where you've seen a huge correction. Also, if you just go by the PSU index, the RSI indicator at one point of time being well over 90 at the weekly level is now fallen all the way to 30 and then started to bounce from there. So broadly, I think PSU stocks are done with their correction. And it's been a pretty broad-based participation. So it's not like one segment or the other. Various segments have participated in that move, whether it's the power finance companies, whether it's those related to the commodities sector. So that includes the metal names. It does include OMCs. It includes sort of a lot of stuff. And most of them are core sector industries, right? So what we are really looking at is a turnaround in the core parts of the economy. And somewhat driven by the metals cycle also. So, when we talk about bond yields and the dollar, what we're really looking at is a falling dollar triggering rising commodity prices. So we saw copper prices jump up quite a bit on Friday, which is why you're seeing some enthusiasm again in metal stocks, not just the steel companies that were doing well last week, but also those in the aluminium and
Right.
copper space specifically. So I think it'll become pretty wide when you think of the PSUs also, because various segments are parts of the economy which will start moving.
Right. All right, Rohit, thank you so much for sparing time and joining us today. Looking forward to having you more often on the platform. Rohit Srivastava of IndiaCharts.com. Take a short break. Up next, we get you a quick chart check and some trading ideas with Aditya Agarwala of Invest for Edu on the other side. Stay tuned.
Welcome back. Aditya Agarwala is now with us for a quick technical check on the markets. The Nifty is still going strong with more than a 100-point gain for itself. Aditya, what are the charts telling you now? And banks are trailing. Will it continue to underperform? Is there a trade? And your stock calls?
Hi, good morning, Reema. Thanks for having the show. If we take a look at the market, I would also like to draw the attention towards the India VIX. That is something which is surprisingly up 6%. And it's sustaining above the mark of 18 now, Reema. So that is something which traders and market participants should keep a close eye on. One should not lose sight of the India VIX, because a move above 18 is something which is a little scary in the market if you are a pure play bull in the market. And anything above 19 will actually lead to a more volatile move in the market. Now, keeping that in mind, yes, we are witnessing an up move both on the Nifty and the Bank Nifty. Let's first talk about Bank Nifty. Bank Nifty failed to take out that key hurdle of 56,000 on the upside. And from there, it's witnessing some kind of a profit taking. My sense is in the coming trading sessions, you will continue to see this range-bound movement both on the Nifty and the Bank Nifty. As far as Bank Nifty is concerned, 54,500 on the downside is a good support area. On the upside, 56,000 is a resistance area, and I wouldn't be comfortable with a long without any hedges till the time this India VIX is below the level of 16. Till the time it's trading above the level of 18, I would like to take long bets with some hedging positions as well. Same holds true for Nifty as well. 25,100 on the upside. REMA is acting as a hurdle. On the downside, 24,400, 24,200 are key support areas. So my sense is both the Nifty and the Bank Nifty will continue to consolidate, while you will see a stock-specific and sector-specific rotation happening in the market. Money is not clearly flowing out, but yeah, it's more of a sector rotation that we are witnessing in the market. So I think IT and FMCG are the two hiding spaces right now, while markets might just turn volatile towards the second half of the trading session. So keeping that in mind, I've got a couple of buy recommendations for the viewers. The first one is, again, from the IT space. Coforge, mid-cap IT name, looks very strong to me on the chart setup, on the verge of a breakout from a bullish cup and handle pattern. On the upside, for a target of 9,000, I'll be a buyer in Coforge, keeping a stop loss at 8,100 on the downside. The second stock is Nestle from, again, FMCG pack. I think this is one stock which has formed its base, and now it's looking to head higher, while markets may turn a little volatile in the next few trading sessions. So for a target of 2550, I'll be a buyer in Nestle, keeping a stop loss at 2,400 on the downside.
All right, Aditya, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. If the outside weather was not an indication enough, it's official now.
It's official now. But you heard it first from Manisha.
Oh, of course, you heard it first from Manisha. And yes, it is official. The monsoons have arrived in Mumbai 17 days before the official onset of the monsoon. And this is, of course, breaking multiple records. This is the earliest ever onset of monsoons in the city. And the last time, the earliest date of arrival was on the 29th of May, and that had happened in 3 different instances, of course, with records available from 1951. So, of course, so good. You heard from SkyMet as well just a few minutes earlier. There will be an initial spurt of rains, but they will take a break in the first week of June. But the monsoons there have arrived 17 days before the official onset date in Mumbai. And today is that day. And of course, we all request our citizens to stay safe in these rains as well. Take a short break. The management of Max Estates joins in on the other side. Stay tuned. Welcome back. Continuing with corporate conversations, the management of Max Estates is now joining in on the show. Mr. Rishi Raj, who is the COO at Max Estates, is now joining in to discuss the road ahead for the company. Mr. Raj, good morning. Thank you so much for joining in. You know, your lease rental income saw good growth, but you fell short of the 130 crore guidance that you had this year. What's the road ahead for FY26? What is the kind of figure that you are penciling in?
So the lease rental at the current run rate, where almost all our assets is 100% occupied, Max Square, the latest one at 99%, the run rate is 155 to 160 crores. That is what we are looking at in this FY26.
155 to 160 crore will be the lease rental income for FY26. Commercial volumes, sir, have been on the rise. What's the outlook for FY26 and the split between commercial and residential?
So, Rima, if you look at our portfolio, we have curated a 17 million square foot of portfolio, growing from 8 to 17 in last financial year. 6 million is commercial and 11 million is residential. Of that 6 million, 2 million approximately is already delivered and leased. Our balanced commercial, almost 3.6 million square foot, is under construction, and that will come online by calendar year second half 2027. And intrinsically, I would like to tell your audience that with the acquired commercial portfolio, we have an annuity rental income potential of 700 plus crore. And this you will start seeing clocking up from FY 2029 onwards to FY 3031. So in total, today we already have 6 million square foot with 700 crores plus potential of annuity rental income.
So what What is the on-ground situation when it comes to demand that you are witnessing, Mr. Raj? We are halfway through the first quarter of FY26. What's the demand scenario looking like, especially in your micro markets like Gurgaon and Noida?
Very positive. If you look at 2024, Pan-India, we did 18% more than 2023 and passed the peak of 2019. If you look at first quarter 2025, if I focus on Delhi NCR has done 3 million square foot, which is 17% higher than first quarter of 2024. Actually, commercial office leasing traction in Gurgaon as well as Noida is going extremely strong, particularly for grade A plus, developer-owned, developer-managed quality building, which we have developed and is clearly reflected in our occupancy as well as 30% plus premium on rentals that we are commanding in all of our 3 developments.
What geographies are you targeting for new acquisitions? If you need to meet your FY28 pre-sales target, so say in the next 1 or 2 years, what more needs to be done and the geographies you're looking at?
So Rima, I'll answer that in 2 parts. If you look at our track record so far on the residential side, which I guess what you are asking me for, we started our residential journey in FY24, did a booking value of 1844 crores. FY25, we have done three times of that, 5,300 crore between Noida and our first residential launch, Estate 360 in Gurgaon. Our guidance to market for next year is 15-20% higher, 6,000 to 6,500 crores. And over FY26 to 28, our guidance is of 21,000 crore. And I would like to share with your audience that of that 21,000 over next 3 years, we already have secured 14,000 crore worth of booking value in our portfolio. So from a business development perspective, we are very sorted for next 2 financial year. Having said that, we would like to grow our 17 million square foot of portfolio with 11 million residential year on year by at least 3 million, 2 million residential, 1 million commercial. And our focus, to answer your question, is going to be Gurgaon, Noida, and Delhi. Delhi is going to be a priority from a residential perspective, given that we have a commercial footprint in Delhi, but we are looking to add the residential footprint as well. We are always on the lookout for newer market, which we are keeping a close watch on within Delhi NCR. But at this moment, our focus is Gurgaon, Noida, and Delhi.
All right, Mr. Raj, thank you so much for sparing time, joining us today. Wish you good luck for the rest of the year as well. The management of Max Estates on the road ahead for the company. Take a short break. On the other side, put the spotlight on PSU banks and how they performed in the March quarter. Stay tuned.
Welcome back. The Nifty's back at 25,140 points up, but it's gotten down on trading hour. But as we do that, let's put the spotlight on financials. In our special offering, FinStreet, Abhishek Kothari highlights the performance of PSUs and private banks in Q4 FY25.
In Q4 FY25, PSU banks have reported their highest ever quarterly profits. The gap to private bank is now the highest ever at more than 6,600 crore rupees. This is largely due to better top-line growth than private banks on a sequential basis that they have seen. So the net interest income growth for PSU banks was around 2.2% YOY and about 1% sequentially, while that for private counterparts was about 4.5% on a YOY basis and just 0.1% on a sequential basis. Other income has also helped PSU banks on their operating profit growth this time around. So PSU banks have seen robust other income growth on a sequential basis, which actually helped their operating profit growth as well. They saw an operating profit growth of more than 13% YOY and about 16.3% on a quarter-on-quarter basis. This compares to a 5% decline in operating profits on a YOY basis for private counterparts and about 1.9% sequential decline for private banks on their operating profits front. Now, IndusInd Bank is the only lender to report operational net loss in Q4 FY25. Profit after tax growth for PSU banks was stronger than that of private counterparts. Profit after tax growth for PSU banks was around 13.5% YOY and about 8.7% on a sequential basis, while private banks saw their PAT decline by 6.7% YOY and about 1.5% sequentially. Now, three private lenders, IndusInd Bank, ISAF SFB and Suryodaya Small Finance Bank actually reported a net loss in Q4 FY25. Slippages increased for the sector marginally in Q4 FY25. For the sector, slippages increased by less than 12% on a quarter-on-quarter basis, but this was led by PSU banks wherein the slippages increased more than 36% on a sequential basis, while that for private banks actually declined more than 1% on a quarter-on-quarter basis. So, annualized slippage ratio for PSU banks continued to remain below 1% level. Annualized slippage ratio of private banks was around 1.9% when compared to 1.96% in the previous quarter. Asset quality, gross NP ratio of PSU banks has declined to 2.6% versus 3.5% on a year-on-year basis. So, gross NP ratio of private banks was around 1.83%, which is flat on a YY basis. Net NP ratio of PSU banks has fallen below that of private banks for the first time ever. So, PSU banks' net NP ratio is at 0.5% when compared to 0.52% for private banks. IIFL CAP has released their note wherein they have shared their views. They say that following calendar year to date outperformance and earnings degrowth in FY26, they expect the sector to take a near-term breather. However, as the deposit cost catches up with a lag, they expect high teens EPS growth in FY27 for the banking sector. While banks' loan growth is sluggish, overall credit growth is still healthy around 13% YOY. Repo rate cuts to drive further net interest margin contraction in FY26. So, the expectation is that 100 basis point of cumulative repo cut that is seen in this cycle will result in 20 basis point of net interest margin compression until 3Q of FY26 and a rebound thereafter in the net interest margin of players. So, they expect higher net interest margin contraction for large private banks, followed by PSU banks, followed by mid-sized banks. The microfinance concerns have shifted from asset quality to growth. So, on the MFI, they expect FY26 growth to disappoint. They expect earnings degrowth in FY26 followed by a strong rebound in FY27 for the banking sector. DIIs have been raising their stakes, especially in private banks, but FIs have been trimming their overweight position in the banking sector.